Hi, I'm Tom Rutkowski. I'm president of Innovative Retirement Strategies. The purpose of this video is just to show you how much money Wall Street makes off of your money as you save towards retirement. So to do that, I've built this little spreadsheet here, and I've got a client with $100,000 of starting principal. And I realize that most people save a little bit every month, but let's just take it as $100,000 for the sake of an example. They're 20 years from retirement, so this money is going to grow and compound at an expected rate of return of about 9.5%. So this is not Wall Street, it's just going to be a steady 9.5% every single year. Client's in a 28% tax bracket, and they're going to pay a 1.5% money management fee. So let's talk about this money management fee. If you hire a professional money manager, they're going to take a fee for the management of your money, and that fee is going to be assessed every single year, whether the market goes up or down. If you invest in mutual funds, those mutual funds charge an expense ratio, and you may not see it, but it's in your literature and in reports that you get. And expense ratios can vary from as low as 0.25% for the case of index mutual funds, or as high as 4 to 5% for some of the larger name brand funds. In this example, I'm using 1.5%, which is slightly lower than the industry average of about 1.6%. And this is also not taking into account trading costs. That is the cost of making individual trades, the difference between the bid and ask spread. So if we get down to the actual numbers here, client has $100,000 in the beginning, invested for the first year, earns $9,500, which is 9.5% of the starting principal. Wall Street takes 1.5% of the total portfolio value, so they get $1,643, leaving you with a net gain of $7,858. Now the key here is I'm keeping track of the cumulative management fee. So each year as the money grows, and each year as Wall Street assesses their fee, I'm keeping a cumulative track of the management fee over time. So if we jump ahead to the end of the 20 years, we find that we've gained $354,000 before tax. If we assume that this is in an IRA and you haven't paid your taxes yet, this is what the client would be left with after tax. We could also do this as non-qualified money, just changing the tax bracket to represent capital gains tax. But anyway, during that time, that 20 years, the cumulative management fee was almost $74,000, or roughly a third of what the client ended up getting, which was $226,000. So you can see that Wall Street makes an awful lot of your money, even though the management fee seems to be just a tiny little 1.5% here. So you can imagine what that would be if you had a higher fee. And remember, these fees are assessed in up years as well as in down years. So you may have lost 10, 20, 30% in the market, as you may have in 2007 or 8. And Wall Street took another 1.5% kick in the pants on top of that. So anyway, the purpose of this video is just simply to show you what the cumulative impact of those management fees are over time. I hope you found value in this video. Please leave your comments below. If you'd like any more information, please feel free to reach out directly to me or look at information on my website. Thank you very much.